Hello, welcome to a new video. On this episode, I'm going to show you the easiest strategy you can use in order to become profitable. Now, why is this strategy so easy? The reason is because this strategy is simple, it's to the point, it has no crazy concepts that a beginner doesn't know, and we're only following the trend, looking for momentum, all while having good management and following our rules. We're not looking for crazy reversals, catching the bottom of the chart, all the way over here, or anything of these sorts. We're only doing what's clear, what's normal. We're going where money is. We're not gonna look for any crazy concepts, and it will be very easy for you and anyone who's just starting to understand. Okay, now what is this strategy about? How do I execute? What indicators do I need? What's the basis of this? The first thing we're gonna talk about is timeframes. Which timeframes are you gonna use? My personal liking is using 3 timeframes, but for the sake of this video, we're gonna use 2 timeframes. In this case, I'll be using the 90 minutes and I'll be using the daily. So we're gonna use the daily as my higher time frame, and as my execution time frame basically will be my 90 minutes. Now, how do you mold this for yourself? Because I'm a higher time frame trader and you may not be. You may want to trade the 1 minute, the 5 minutes, 10 minutes, or whatever. So how do you mold this for yourself? The way that I do it is whatever time frame I'm trading, it's always gonna be multiplied between 10 to 15 times. Normally, I will trade the 15 minutes, then multiply by 6, and then this multiply by 10 to 15 into the daily. But for this video, we're gonna use only what is called my middle time frame and my higher time frame. And we're gonna use the middle time frame as our smaller time frame and the daily as the higher time frame, just like we did before. So in my case, will be 90 minutes multiplied by 10. That's how I like to do it. Or 90 minutes multiplied by 15. And this 90 minutes multiplied by 15, it gives us the daily. I believe it's actually 16 times, but it's pretty much the same thing. You can play around with this, and this way you can mold it for yourself. So in case you're trading the 10 minutes, you can mold it for yourself, and you can do 10 minutes multiplied by 10, which is basically 2 hours, or multiply by 15, which is around 2.5 hours. And the same thing with the 5 minute. If you was to trade a 5 minute, you could do 5 minutes times 10, which is 50 minutes, all the way to 16 times, which is 5 minutes times 16 will be 80 minutes. Now that it's clear that we're gonna use 2 time frames, and we're either gonna multiply the lower 10 times into the higher. In my case will be 90 minutes to the daily 16 times. Now our actual strategy is gonna be based on direction, trend following, momentum, and a couple other things. And the first thing we're gonna do is we're gonna add the EMAs, and we're gonna use the EMAs for 2 reasons. One, we're gonna use the EMAs for direction, and we're also gonna use the EMAs for recognizing momentum. Okay, so this is gonna be why we're gonna use the EMAs, and this is our first key concept. Okay, so in this case, we're gonna do this. We're gonna go into indicators, and we're gonna type moving average exponential, and it will show up like this. We're gonna click 3 times because we're gonna use 3 EMAs. I'm not gonna click because I already have it, but you will click 3 times in here. And the first EMA we're gonna add is the 200 EMA. Okay, this will be the 200 EMA, but if you don't have it, you can just click over here and then type 200, and that will be the first EMA we're gonna use. This EMA is gonna be used for direction. So the way that we're gonna use it is that we want the EMA 200 to always be below price. This is gonna tell us, in the case of buys, that the trend is bullish. And in the case of sells, if the EMA 200 is above price, it will mean the trend is bearish. But that doesn't matter, we're looking for buys here, and adding the 200 EMA tells me that we're in a bullish trend, and the moment that the 200 EMA goes above price, I will stop looking the chart. Now, we're gonna use two more EMAs, and these EMAs are gonna be used to determine momentum and the strength of the trend. And the first EMA we're gonna use is the 20 EMA. So we're gonna do the same thing. As we click 3 times, we're gonna do the same thing, and we're gonna use 20 EMA. As you can see, the 20 EMA is already added, but if you don't, please add it. Now that it's added, we have the 200 EMA. When price is above the 200 EMA, it generally means that the strength is high, and this is something that I want to look for. I rather see that the EMA is surfing price, so if it's not surfing price, I wouldn't look so much into it. But don't worry, because there's another EMA that we're gonna use, and this is gonna be the EMA 10, and it's used in the same way as the EMA 20. Okay, so we're gonna do the same thing. We're gonna make this show. We're gonna add EMA 10, EMA 10, EMA 9. It doesn't matter. I'm just gonna leave it at 9, but it doesn't really matter much. It's 10. It's a 1 difference, so it doesn't really matter so much. Okay, so as we talked about, we're using the EMAs for direction and recognizing momentum. We're using the EMA 200 to determine direction, and we're using the EMAs 10 and 20 to recognize momentum. There's a lot of momentum going on here, and this is something I will look at if the 5 minutes, because we're on the 5 minute, if the 5 minute was a time frame that I'll be wanting to get involved in. Now, another way that we're gonna determine direction is just very simple. We want also multiple break of high. Okay, this is super simple. Guys, don't look too much into this. We just want to look for overall break of highs. There's a ton of break of highs here, 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 here. One break down, you could say, even though it was just a wick. And then it kept breaking new highs. This for me is an overall bullish market. And this accumulation heading into markup in the words of Wyckoff. So around this, we turn this into accumulation. Then there was a markup going on here. We continued bullish, and we're heading into another markup. There's no correct way to label everything, in my opinion. Somebody can look at this and see something different, but it doesn't even matter. Why? Because at the end of the day, we're only looking to position ourselves when price has a lot of momentum. So no matter which way you think this is, at the end of the day, I'm trying to get position in places like this. Okay, so this is how we're gonna look at it. We want the EMAs to be stacked up. We want them to be in order. We want price to be surfing the EMAs when it comes to the EMA 10 and 20. So this one, and you want overall multiple breaks of highs. All while the EMA 200 is below price in case you're buying, and above price in case you're selling. Now let's erase a bit of this so you don't get confused. Now let's go into the actual time frames that I'm gonna use, which is gonna be the daily and the 90 minutes. In this case, we're gonna analyze this and we're gonna see if it's good to trade or if it's not. This will be our higher time frame. Remember that. So price went above the 200 EMA. We started seeing a lot of break of highs right here. Also right here, by the way. So 1 here, 2 here, 3 here, 4 here. So we're pretty much bullish. Also, not only we noticed multiple breaks of highs, we also saw that the 200 EMA went below price, which means that we're bullish. And now the EMA 10 and 20 are surfing price, specifically the EMA 10. Okay, now this is what I like to see. Of course, you also want to look for some clarity, something that looks clear, not choppy. In this case, for me, this looks pretty damn clear and has a decisive direction. Okay, this is going to be something that you want to test in order for your eyes to get used to how a good setup looks like, and it will help you gain confidence in the setup. Now, once this is happening, I want to drop down into the 90 minutes just to see what the 90 minutes is doing and to see if I actually want to get involved or I want to wait. So let's drop down to the 90 minutes and let's see what's going on. Okay, so let's explain what we want to see in order for us to get involved and place a trade. The first thing we're going to see, and this is very simple. Why? Because it's the exact same thing that we're looking on our higher time frame. Yes, you heard it right. We're only looking for the exact same thing. So, with that being said, we will be looking for the EMAs for direction and recognizing momentum. And we will also be looking for multiple break of highs just to determine bullishness. So tell me what you see here and if it's good to go or is it not yet, at least. In my opinion, this still needs some work, but let me break it down for you. The EMA 200 is below price, which means that we're 100% bullish. Also, the farther the EMA 200 is of price, the more bullish we are. Generally, as you can see here, price broke down and the EMA 200 was getting close to price. But once price shoot up, the EMA 200 got even farther away. Now, once we're clearly bullish, according to the 200 EMA, we're gonna look for multiple breaks. As you can see, we see a lot of breaks over and over again. 1, 2, 3, 4. We broke down once and then we continued going up. You can also see some breaks here inside of the range, but it's clear and it's evident that we're 100% bullish. Okay, now that being said, what is left for this asset in order for me to want to trade it? In my opinion, this is where I will start looking at the chart. This is where I will start trying to wait to execute my trade. I don't want this price to drop. I would like to see my EMA 10 or 20 surfing price once I see some kind of bullishness like this. Once this happens, I will place a trade, put my take profit around the high and put my stop loss around the low of this. I will target 1-to-1 generally, and believe it or not, this is the whole strategy. Of course, no strategy is 100%. You're gonna lose some trades. Sometimes you're gonna enter and your price is gonna break down. This is gonna happen, but with good management and following your rules, I guarantee that you will win more than you lose. Okay, now we're gonna look for a real life example. We're gonna break down some stocks and we're gonna look to get involved in some of this. Okay, so I couldn't find an opportunity at the moment on the things that I had on my watch list, but I will leave you with a pre-recorded video of this trade that I took early at the market open, and I'm gonna break it down for you right now. Okay, now we didn't see a lot of break of highs actually. I think this is mainly the only one, but by the strength of this, the way that this broke against so many lows, how many lows are here? 1, 2, 3, 4, and then after this break of high, we saw 1, then right here we saw 2, and for me this is enough. Why? Because even though we only broke twice, the EMA 200 is below price, and the way this broke against all these lows makes me think that we're now bullish. Okay, so as the session started around here, I go into my 90 minutes and I look for the exact same thing. As you can see, the EMA 200 is below price. We're creating new highs, obviously, so we're bullish. And the EMA 10 is surfing price. Now this entry was a little bit above, I believe, around here. I entered late, but for me it was valid. But in the perfect world, I would recommend you to just follow your rules every single time. I'm a little bit more experienced, so I can deal with some variables. But for you, please just follow your rules. The correct entry will have been around right here. I believe it was pre-market, so we wouldn't have entered, but I believe it was still valid and I entered around here, okay? But the perfect example would have been this. Price dips, and as quick as it shows bullishness, I place my trade in this candle, in this, let me zoom in, around this candle. Why? Because it shows strength, and you can tell just by looking at this candle and looking at this wick that it broke some kind of high on the lower time frame. So entering here or around here, as it broke another high right here, as you can see on the lower time frame because of the way the wicks look. Let's just go into a lower time frame to confirm, and we can see that it actually broke a new high. So the perfect entry, I would say, will be here. We will place the stop loss at our low, and if you see on our higher time frame, or in this case or smaller time frame, it will look like this. We'll have enter right here in the perfect world. Then the moment that this hits 1-to-1 RR, I'll have took my profit. Quick note, the break even in this is aggressive, so I will set my break even the moment that it reaches around 0.6, 0.7 RR. At this point, if price reverses, I don't believe it's worth it to still be on the trade, and I believe it's just better to take your break even. This is how you protect your capital and avoid a ton of just unnecessary losses. Now I'm gonna show you how the live trade looked. This is a pre-recorded video, but I will show you in the next video. Okay, as I'm watching this video, I first had AMD as my first option. I ended up not taking it because it was not a big enough retracement for me. So this video is sped up of what was happening in real time. You can check the time, it was 3:29. So 30 seconds before the market opened. I was getting ready to take it. I was considering taking it, but I ended up not taking it. One, because it didn't got to my point, and two, because I simply didn't like it enough. I was logging in into the broker, and I was waiting for the entry. Now at this point, I was watching it. I wanted to see a deeper retracement. It never happened, but if let's say if it retraced to the 10 EMA and then went through some kind of bullishness, if I saw some kind of bullishness, of even if it went through the high, I would probably have taken this trade. I want to see something a bit deeper, and since I saw that didn't happen, I went into QS and I saw that there was a late entry, but I wanted to take it. Why? Because I thought it was a nice setup, and I'm aware of the risk, and I'm aware that, you know, if it's a loss, I have to just take it on the chin because I entered late. But I thought it was a really, really nice setup, and I got to enter the trade. Now, I didn't place the right amount. I tried to make the calculation quick, but I was far wrong from what I really wanted to do. So I had to place another entry, which was also late, but I didn't care because I liked the trade that I was taking. And also it's just a 1-to-1 RR, so I don't have to wait for price to travel so much in order to get my profit. Now at this point, I'm just waiting to manage my trade. I'm just waiting to set my break even, which is around 0.5, 0.6, 0.7 in RR. So here I'm just waiting for price to go enough points up. Since I'm risking $100, it will be around $60, $50, $70 where I will put my stop loss to break even. So we're waiting and set my take profit. And let's see how it developed. Even though on the TradingView chart it showed that my 1RR was already taken, it wasn't really because my entry was way above of what it shows on my drawing, on my TradingView RR drawing. I set my break even when it reached around 50, 40. I managed very aggressively because I was aware that it was a late entry. So I managed the earliest as possible as I could have. Now that it was risk-free, I was just waiting for it to hit 1RR personally, but on TradingView it showed up as around 1.5 RR because again it was a late entry. I'm break even, so it's risk-free. and I'm just waiting for it to hit take profit. I was also thinking about going out earlier because again, it was a late entry, but I decided to just keep it running since it was so close already. Now at this point, it's getting very close to my take profit, and I'm just getting ready to either manually close it if it gets close around 95 or something, or for price to just take me out by take profit. Again, I placed an order, but I always like to close things manually. But just in case, I just set the take profit already set. We're just waiting over here. At this point, I was thinking this gonna reverse because in market opens, you never know. You see these kind of moves that go in the complete opposite direction after, and that's why we manage aggressively. But at the end of the day, it's our strategy and we have to respect it no matter what. And at this point, I was pretty confident that it was gonna hit my take profit. I later decided to up my stop loss now from break even to around $50 because if price went below that last week, I didn't think that it would not I didn't think that it would go back up into take profit. So I set my stop loss below this wick for a small profit of 0.5. But then it just kept running and basically hit my take profit. Just give it a couple more minutes, seconds. I was ready to close it manually. And then this happened. Okay, so position was removed, which means I cannot close manually because the position is gone. And that's how we pretty much did it. Thank you guys for watching this video. Hope you guys enjoyed. I hope this video was of value. If you want to go a little bit more deeper on these concepts, feel free to join my mentorship. One thing, you don't need to join the mentorship to be successful and to achieve success. In fact, I believe that with this strategy, you can make a lot of money as long as you do your homework, you do your back testing, and you're disciplined enough to follow your rules. But if you want to learn more and maybe see my screener, my stock screener that I use in order to find these trades, in order to find the stocks that I want, because as you may know, there's thousands and thousands and thousands of stocks to choose from. So you need some certain set of configurations in order to find these type of stocks. Alright guys, thank you for watching this video. Hope you enjoyed. I'll see you guys on the next one. Peace out.